Thank you to everyone for joining us live today for this week's edition of Tech Tuesday. Today's session is Trends in Blockchain Technology. It's brought to you by the Canadian Securities Exchange, and we're pleased to have three presenting companies along with our guest moderator. We've got Vinod Varma, he's the CEO and co-founder of Creator.co. Hussein Hallak, he's the founder and CEO of Next Decentrum Technologies Inc., followed by Eric Ashdown, head of ecosystem for Covalent. Our guest moderator today will be Shafin Diamond Tejani. He is the CEO of Victory Square Technologies, and this represents today's lineup. Our objective in running Tech Tuesday is twofold. First is for companies to gain visibility and traction on an accessible platform. The second is to inform capital markets players as well as investors about these types of companies in the tech space, while also providing new knowledge of what is happening in the world of blockchain. For you as attendees, we do ask that you share your ideas, leads, and possible funding, as well as feedback with our presenters. You may even have a potential strategic relationship. You can find their contact information in the profile box. With respect, we might refrain from giving management advice unless we're truly experts in the company's particular field, and don't treat our presenting companies as marketing targets for services. And now we will move on into our company presentations. Coming up first is Vinod Varma. He's the co-founder and CEO of Creator.co. With over 10 years of sales and marketing experience, Vinod was previously the buyer at Best Buy. He helped brands like Fitbit, Samsung, Garmin, Sony, and more build awareness, trust, and significantly capture market share. Today, he is the founder and CEO of Creator.co, which is a globally recognized top 5 influencer marketing platform that has worked with brands like Walmart, Target, Crayola, and more. And with that, let's welcome Vinod to the show. Thanks, Vinod.
Thanks, Anil. Hey, guys, pleasure to be here with you. It's great to have the opportunity to be in front of you. I am the co-founder and CEO of Creator.co, and we really built Creator.co as an ecosystem to help brands and creators collaborate and thrive together, essentially streamline collaborations, help them grow, and at the end of the day, earn more money, both for brands and creators. So there's a few things going on in the creator economy that's creating some friction. So it's quite fragmented, especially with the emergence of Web3. So with influencer marketing specifically, brands are having a really tough time finding the right creators, being able to manage the typically complex workflows, and then trying to integrate with these third-party channels like Instagram and YouTube. And for a brand to take that on their own, it's significant resources and time. And so we offer solutions to help them automate the entire process. We provide them access with an amazing database, and kind of help solve some of the friction around influencer marketing. Social commerce, again, a big part of the creator economy, arguably the largest part of the creator economy, still has room to grow, especially in the US. Right now, as interviewed by Influencer Marketing Hub, only 3% of creators actually report affiliate links to be their main source of income, and affiliate links are directly correlated to social commerce for most creators. And then there's this new emergence of Web3 and NFTs, and that's a really exciting space. Right now, there isn't a very convenient way to mint branded social content into NFTs and to provide a workflow for creators to easily not only do that, but actually understand why they're doing it. Most creators lack the knowledge and tools to utilize them, and micro influencers and small brands are kind of left hanging right now, where they don't have the resources or necessarily the know-how on how to make or build a successful NFT program. So that's where Creator comes in. So our vision is to be the destination for brands and creators to collaborate, grow, and earn more. We've pegged it as a $548 billion market opportunity between influencer marketing, social commerce, and NFTs. There's some significant opportunities within those three segments, and we can highlight some of them here. So one of the big things is 77% of creators reported brand deals as their number one source of monetization. And we don't see that going away anytime soon. We know that micro influencers are more trustworthy. We know that 73% of people actually believe the recommendation of their said peers. And to kind of put more proof into that statement, YouTube and TikTok have launched a combined fund of $300 million specifically to invest in creators on their platform. So we know that they're obviously seeing the value of creator marketing and influencer marketing and lowering CPAs. And so we're providing an ecosystem for brands and creators to make collaboration easier. Social commerce is huge, especially in China. It's pegged to hit 1.2 trillion by 2025. And right now, it's 25% of the total retail in China, so it's a full quarter. And the US, respectively, is only 14%. And so therefore, we believe it's poised for some serious growth. And we want to be there to help take advantage of that. And then there's NFTs, the kind of the new thing in the creator economy. It's definitely the buzzword, and everyone knows they want to be a part of it. But for most creators and most small, medium brands, they don't necessarily know how just yet. So it's a great way for them to raise capital, increase exposure, build fandom, transact transparently, and protect their content. But they need a bridge to get there. And we want to be that bridge. So right now, as you know, there's over $80 billion market cap by 2025 pegged for NFTs. I personally think that's a little bit light, the way that things are growing and how quickly, but we'll see. And so this is our ecosystem and why it's designed so well to fulfill our vision and our mission of being the destination for creators and brands. So we have three kind of wheelhouses that our ecosystem handles. One is the influencer marketing side of things, where we have over 250 million influencer profiles with deep insights available for our brands to search and invite to various campaigns. Our software helps automate campaigns. We automatically collect all of the data, all of the assets for brands. So it's very, very streamlined and really beats how a lot of them are doing, which is on a mix of either Excel or various project management programs. Then we've got social commerce. And so we've recently partnered up with Rakuten and Reversion, the two largest affiliate networks that transact well over $1 billion of sales each a year. And what we do is we essentially blend the benefits of our influencer marketing platform and layer in the attribution technology that Reversion and Rakuten use and have established with so many brands, and become really a content and recruitment engine for their programs. And with this, we're essentially empowering creators to become their own storefronts, which I think is really powerful. And then finally, NFTs. So some of the features that we're looking at building include giving creators the ability to actually mint their social branded content and promote that or sell it or use it to build fandom. And these three wheelhouses of ours, these three product features, hover around our community. And that's something that we hold very near and dear to us. We're building a community right now. We have over 120,000 registered influencers actively collaborating with brands, joining affiliate programs, and soon they'll be minting their own NFTs to drive fandom and increase their own revenue. So we'd like to get to 2.5 million creators by 2025. It could be much sooner than that based on the growth that we're experiencing in Q1. But a few things that we're doing to get there: NFT drops, creator webinars, and creator digests. So blogs, webinars, and exclusive NFT drops to increase sticky, to give creators education on how NFTs work, how they should use them to build fandom. And then blogs to help creators create better content, give them guidance on promoting content, the difference between potentially whitelisting or sponsoring posts when it comes to brands. So really just being there as an educational platform and a resource for them so that they can depend on us to actually get the tools that they need to grow, collaborate with the brands, and then have access to things like NFTs and Web3 technologies to increase fandom and to maybe venture in other areas that they haven't explored before, like education or memberships and things like that. And finally, summing it all up, our amazing advisory boards. So we've definitely been blessed to have, in my opinion, one of the best advisory boards in Vancouver. The help at Victory Square has been awesome as well. We've got some amazing posts, and if anyone is interested in chatting about our upcoming raise, would love to hear from you. Feel free to shoot me an email, and we'll be in touch soon.
Thank you, Vinod. Thanks for that. Next up, we've got Hussein Hallak. Hussein is the founder and CEO of Next Decentrum, the launchpad for the world's most iconic NFT products. Creative director of Crypto Pharaohs, which is a collection of 7,006 majestic collectibles inspired by the rich history of ancient Egypt. Hussein is recognized in 2019 as one of 30 Vancouver tech thought leaders, and influencers to follow. Hussein writes and speaks about startups, blockchain, and NFTs, and advises blockchain and tech startups, including Ami Pro, Giger, Mobile Art School, FinTrucks, Magic Bus, Traction Health, Cloud9, and Peace Geeks, just to name a few. Hussein, welcome to Tech Tuesday.
Thank you very much for having me. It's a pleasure to be here. So next Decentrum is the launchpad for the world's most iconic NFT products. We are blessed to have launched actually last month with great progress. We have exceeded our first forecast for launch revenue, and we have managed to build a very good community to start with. And with great founders and great contracts. Everybody's talking about NFTs. They are in all the news, but we don't see them as magnificent as everybody sees them. Yes, the market is huge. There's over $40 billion that you hear about, but to give you a comparison, it started with the year before a $66 million size of market. So it is a massive expansion, but only because it's based off of a need we've always had. It's in our DNA to collect. We loved collecting stuff. There's almost $1 trillion market in collecting all kind of artifacts, game stuff, sports, and art. NFTs are just a new technology for collection. And 50,000 years ago is the oldest grave we could find that where human beings were born were buried with artifacts that they held together. The problem with NFTs is that they're complex. A lot of the offerings on the market are worthless, unfortunately, and the market is plagued with scams. So what we created is Momentable. Momentable is a platform for iconic NFT arts that makes it easy to collect. It curates some of the best artifacts and artworks from around the world, so you know that what you're collecting is something of value, and it makes it super easy and safe through education and through different forms of payment than just crypto. So it's very easy to use. As a collector, you sign up, you collect, and you showcase what you've collected to the world. And then as a creator, you create your collection, you showcase it and sell it, and you have a great dashboard in order to manage that collection and manage your revenue. What our offerings kind of focus on is 3 areas. The first area is museum NFTs. We work with museums in order to create a gallery-like storefront. So that they are the only ones that are showcased there. Nobody's next to them. Museums are very careful about who they get showcased next to. So you will never see a museum on OpenSea, for example, because they don't like that experience. They want to maintain their audience and control that experience. It's all about the artifact given its space, and we take that experience beyond limit. We are now talking to the Egyptian government, and we've been in talks actually for 8 months. It takes a long time. We do have a partner in Egypt, and we do have presence in Egypt. Actually, a portion of our company is there because Egypt has 2/3 of the world's artifacts. So it's a massive undertaking to do, and I think it's significantly important. Our team agrees. So what we're doing is bringing those iconic digital collectibles to the digital world using NFTs. They are exhibited in many different experiences, and only the collection, when you're presented with an artifact, you also presented with other artifacts of the same type from the same museum, so you're able to continue collecting. Then we take the experience beyond the space limits. If you don't know, almost 90% of artifacts in the world are sitting in storages, so they don't even see the light of day. Nobody gets to see them. So by offering the ability to see them in AR and expand and offer them as NFTs, people have an ability to collect and interact with the cultures they appreciate the most. And we create an experience where it becomes gamified. It becomes more exciting. You can for example, find an artifact where it was excavated, which creates a completely different experience than the one that exists just in a museum. So it goes beyond that and brings people to the museum. So museums would love that. The second way we do our work is we collaborate with artists. In this case, we actually collaborated with artists from the Middle East from the UAE. One of our co-founders is based out of Dubai. These are 6 Emirati artists that are quite unique that we created a collection for. We introduce them, we build interest in the collection, then we show the artistic expression, and we allow them to create multiple drops and multiple sources of revenue. And finally, we actually present our own collections. So not only do we onboard artists and museums on our platform, we also release our own collections, paving the way and the path for museums and artists to do similar, and building a community that's interested in art. So that's why we created Crypto Fairs. Crypto Fairs is a collection that is based off of the Egyptian culture, and it's art-based. So it's if you look at them, they're one of the most iconic NFTs that are out there, heavily focused on the artistic side rather than, let's say, anything else, and it has the utility and the community that people look for. So we think of it as the pinnacle of what NFTs should be, art-based NFTs at least. So we have a story that is developed behind it, which is actually we're now turning into a novel and a comic. And we focus on stunning artwork. You can look at the colors, the details, what we focus on, heavily inspired by the culture. And it's we're building for the success. And what that means is that we have a roadmap planned for the next few years. That includes the comics, the novel, the even games, and building the community to an awe-inspiring community. So the way we look at the NFT market is everything will become an NFT. It's like kind of from a discount voucher at this minimum, it's a discount voucher or a club card or an access card that allows you access to certain benefits. So for example, think of the Costco card or a discount to a store. That's what NFTs can be, where it's on your mobile, you can get that discount. So we think everything is going to be NFT. That's why the $4.3 trillion market size that we anticipate. Because already hundreds of millions of people, or 150 million people, have already investment apps on their phone. Those investment apps will start opening up crypto wallets, and those crypto wallets can accept NFTs. So suddenly you see one of your favorite brands dropping in an NFT, just like you heard from Vinod, for example. So now you have an NFT that gives you access to certain benefits. A portion of that will be NFTs that are focused on the collectible markets. The collectible markets is already at $1 trillion size. So we see those moving to using more NFTs, and we are aiming to capture a significant part of it, focused on art-based NFTs from museums and artists. The way we approach our business is we sit anywhere between a consultancy, there are consultancy in the market, and there are platforms. We sit in between where we offer certain services that will be templatized and automated as we grow, and we do have a platform at the heart of our offering. Our difference from the market is that we are an all-in-one offering. So you come to us, museums, they need hand-holding. So we do that. We have our own collections, so we don't have to wait for the market. The market will take time. So we will build our collections, which builds our revenue. We have a learning center because we were a learning company first. So we built our educational programs, which offer an on-ramp that is easy for new customers. And we have an exceptional UI experience. In addition, we have success partnership. We partner with our clients. We don't just let them pay for the service. So recently, our traction is we signed with the Mob Museum, one of the top 25 museums in the U.S. We signed with Visual Capitalist, which are the number one visual content provider in the world, and we partnered with them, and we released some of the early NFT infographics, and we partnered with Daily Hive, which are the top media company in Canada. So we're doing several collections with them to help local artists and to introduce very unique collections to the market. And this is our model. Our model is we partner, so we take a percentage of the revenue. And because of the technology of NFTs, what's great is that we don't have to fight the platform wars. We don't have to fight for getting people on our platform and keeping them on our platform. the artifacts and the artwork and the collection start on our platform. However, they can go anywhere because this is blockchain. They can take those NFTs and sell them on any marketplace, and we still make our money. So because of the nature of NFTs, we still collect from the royalties. We still collect our percentage from the sales. So that way, we don't have to worry about keeping people on our platform, even though we will do that. However, they can sell them anywhere. We still make our money. So we're raising $2 million right now and hope to get us to massive revenue and capturing the market. The big players are not paying attention to the museum market. They're not paying attention to established artists because they're hard to onboard. We've been in B2B for many of us for over 15 years. We know how to deal with government. We know how to deal with organizations, nonprofit, big organizations. So these are the organizations that we want to onboard and capture the market before the big players pay attention to us and pour money into that. And we're very thankful for the support that we've got so far. Like the likes of Victory Square, the likes of Cloud9 have supported us and funded us to get here. That's the previous funding that we have had. Please feel free to contact me on these details whenever you want to have a chat. Thank you very much.
Hussein, thank you very much. Very informative stuff. And next up, we have Mr. Eric Ashdown, who's the head of ecosystem at Covalent. Eric built a token crowdfunding platform during the 2017-2018 crypto boom, exited to run partnerships at BitAli, which is a company that specializes in integrations with wallets and exchanges to allow people to spend their crypto via payments and on gift cards. Before this, Eric worked in both product at larger companies such as IGG, as well as Best Buy, along with partnerships with financial and tax products dealing exclusively with C-suite tech entrepreneurs. Eric, welcome to Tech Tuesday.
Thanks for having me. Okay, guys, so let me tell you a bit about Covalent. Covalent is, it's one API, 1 billion possibilities, which is our tagline for what we do. Because Covalent is a database product and we allow people to query billions of rows and columns on public blockchains. So let's go into things to consider and how we see the future coming. So if you look at the last, from 2020 to 2021, you can see a lot of emerging trends. You can see Visa, PayPal, Square, large payments networks getting into crypto. You can see what's happened with the NFT boom from the NFC to UFC to Warner Brothers, all getting into NFTs, not to mention all of the ground up new movements that have happened. And you've seen large government infrastructure projects, payments infrastructure like El Salvador, Bitcoin, the China central bank digital currency, as well as that in Korea. And if you look at the chart on the right, you could see the long tail adoption of new disruptive technology. You could see where Bitcoin is in terms of its adoption. So we believe we have a lot of room to go. So our view of the future is, given the traction that we're seeing and where the market is today, we believe that millions of pieces of critical information will be on public blockchains. We don't believe that one blockchain will be the only blockchain. There'll be multiple, such as Solana, Ethereum, Bitcoin, et cetera, et cetera. There'll be thousands of applications that will power our lives, some that we'll be aware of and some that we'll be less aware of. And given that the growth we've seen in the last 24 months, we believe that there'll be more than 1 billion people on chain working and using public blockchains on a daily basis. So that what type of applications or what type of blockchains? Well, you can see here there's a variety. There's 8 blockchains. There's many more that we couldn't fit on the list, and they encompass a variety of use cases. So government data, healthcare data, financial data, gaming, art, identity, real estate, really everything. Anything that would require a public ledger or to be brought into the public domain and made visually aware of who owns the properties. We believe that all of this is coming on chain, and we've seen it in various forms coming at different paces in the adoption curve. So it's very exciting for us. In order for all these blockchains to operate or for this future to take place, data interoperability is essential to operate at scale. What I mean by this is, if these blockchains are producing limitless amounts of data, the data is not necessarily organized, it is not necessarily usable. So that's the problem that we've seen, and it's a massive one, because if this is the future, all data coming online, and everybody working on the internet and running on public blockchains is going to need to know what's going on. So you can write things, but you need to be able to read it and understand it, look at the trends, et cetera, et cetera. So that's where we've developed the Covalent API. It's a single API. It's queryable from the cloud. There's no code required, and enables people to get access to multiple blockchain data in a matter of minutes, opposed to hours, weeks, or whatever it may be. So what type of use cases can you actually do today? Because people always ask this. People are looking at us saying, okay, well, there's lots of things that are happening on public blockchains, but what data can I actually pull from Covalent today that is going to be useful? Well, if you look at play to earn gaming, we have that. We have all play to earn gaming that is queryable from our API. If you want to do DeFi taxes, that's there. If you want to look at on-chain governance and voting data and who is participating in these votes, that's there. Trading data on decentralized exchanges. Building visual dashboards to just understand what's going on-chain forensics. So for people who wanted to do, who wanted to find out where stolen funds had gone. Liquidity farming. So people who are looking to earn more tokens by participating in DeFi. Know your customer, KYC, predictive analytics, governance data, transactions, wallets, and of course NFTs. And this is just scratching the surface from the use cases that we've seen today. And we really have no clue what use cases are coming tomorrow. Like I said, Covalent is a data company, and we're just giving people data and looking to see what they do with it. So how does Covalent work? Well, what we do is we plug into multiple blockchains, 20 plus blockchains, and we take all of their data from something that is called the RPC node, and we ingest it into our own indexing node, so into our own database. And so as these ledgers create limitless amounts of data, we are taking it, we're bundling it, we're organizing it. We then make it useful for people by allowing it through 3 endpoints. So a Class A endpoint, so we see large companies in the tax space using this. We see NFT marketplaces, wallets using all of this. Then we see Class B endpoints, which are more application specific, and then Class C endpoints are application specific endpoints that are actually built by the users of the platform. These are tests, so these will be coming soon. All of these things, though, the one theme is that all of these are queryable from the same API. So whether you want to get NFT data, tax data, trade data, wallet data, it is all available through one API endpoint. So what does that look like, right? That's how the product works. But Covalent, at the end of the day, is building a decentralized network. And when I say we're building a decentralized network, there is a token. So what I try to do is we've sort of working with this analogy of having of Covalent is the DoorDash of crypto data. So if you look at DoorDash, how DoorDash works is the customer purchases food. It goes through the DoorDash application. The money then gets paid to the restaurant. The restaurant sends a delivery person to deliver the food. The person gets the food, they're happy. With Covalent, how it works is there are applications. There are applications who are using the Covalent API. They put data into a smart contract. There is then, they get the data. They're sent by a set of distributed validators. So think of validators like restaurants. And then the validators, the people who are fulfilling the transactions, are paid in what's called CQT, so the Covalent Query Token. So we've broken this down, as you can see it on the side. There's, DoorDash is the app. The restaurant is the restaurant suppliers. The people providing the food are the blockchains. The dishes are really the type of data they're looking at. So NFT data, transaction data, et cetera, et cetera. And then the validators are the people actually making and delivering the food. So they're hosting separate parts of that distributed infrastructure. The difference between Covalent and DoorDash is if you're holding CQT or running infrastructure, you are then paid 100% of the revenue. So this does not go to, it's not like DoorDash taking a large fee and hurting the restaurants or hurting the delivery people. That's how we looked at this. So we were outsourcing all the infrastructure costs to these people running infrastructure, and they get paid in our native token for the Covalent network. So I mentioned that Covalent is a database and it's a decentralized network. So there's 2 types of databases in this world that exist. There's ETL and ELT. What we are building, an ETL is if you're looking at lots of databases or more traditional databases, it's, think of a guy going to salmon fishing with his fishing rod, and he has his line. He's sitting out by the shore. He knows what he's doing. He's got all his material. He knows exactly what he's looking for. We have been approaching the market is more from an ELT pipeline perspective, where we were on the assumption where we're saying, let's take all of this on-chain data, let's put it in databases, and let's make it useful. So we don't know what we're getting. We're just taking everything. So think of it as industrial fishing that's going through the water, taking out all the data, and then just making it usable later. So what does that look like in terms of our traction and our approach to the market? Well, today there's over 350 projects, production grade projects, who are using us for their data, including some of the largest ones in the crypto world. such as Aave, NFTX, Zerion, Zapper, Rainbow Wallet, APY Vision, and the list really does go on and on and on and on. We couldn't even fit all of them. We've also grown a community of 15,000 developers who believe that this is the right approach and a tool that really has captured their hearts and minds. As we've seen, the growth is explosive. I mean, when I started a year and a half ago, I think there was 80 people in our community, and now there's over 15,000. So I think we're doing something right. So how big are our markets? Well, if you look at just the analyst market alone, which isn't really the largest crypto market because the data has not been available, there's about 3 million registered analysts right now. Working in finance, working in whatever it may be. And in the crypto developer market, it's 285,000 developers who are actively working in crypto. We believe both of these markets are going to 10x in the next 5 years as the adoption comes. I think everybody else in this call has done a good job at articulating the size of the market to come. And if that market is growing, then you're going to see more developers come, and our product will grow along with the market. Like I said, we have multiple use cases, and it's complementary to everybody else in this call is doing. So that's me. My name is Eric Ashdown. Once again, I'm the head of ecosystem. Thanks for the time. Please reach out if you have any questions.
Thank you very much for your time, Eric. Great presentation. So thank you to all three of our presenting companies. Next, I'd like to introduce our guest moderator as we move into the question and answer period. Our moderator today is Shafin Diamond Tejani. He's the CEO of Victory Square Technologies. Shafin launched his first company, an online dating website, from his university dorm at the age of 19. Since then, he's launched over 40 startups in 24 countries, creating a combined market cap of over 1 billion. His most recent success, Victory Square Technologies, trades on the CSE under the symbol VST, is an accelerator with over 20 portfolio companies that are focused on emerging technologies such as mobile gaming, esports, sports betting, health tech, insurtech, and security, using the most powerful technologies in AR and VR, along with blockchain and AI. VST has a proven process for identifying and investing in extraordinary startups who are working on innovative and disruptive projects in every sector of the global economy. Shafin has received numerous awards, and outside of his entrepreneurial work, Shafin has contributed significant time to charity as well as community work. Without further ado, Shafin, welcome to Tech Tuesday.
Thanks for having me, Anil, and thanks to the CSE for putting this together. Thank you, Vinod, Hussein, and Eric for kind of walking us through Next Decentrum, Creator.co, and Covalent. All three companies and teams are working on some exciting things. Just to start, there are a number of kind of buzzwords popping up in all those presentations, and I think for investors watching, it might be good to break some of those down. So, maybe we'll start with Eric. Maybe just give a quick definition of Web3.
Yeah, so Web3 is the open internet. So the thing that's amazing about Web3 is if you look at the history, Web 1 was static web pages, news. Web 2 was more interactive and more engagement, but everything was centralized with large infrastructure, large ecosystems. You saw the rise of Facebook, Google, other companies like this. And Web3, it's more of an ownership centric. So people who are running Web3 projects or building Web3 infrastructure are creating an open and accessible internet that anybody can participate and profit from. It's not owned by any one person. It's really community based and really accessible to anyone, no matter where they are, who they are, no matter where they are, who they are, their socioeconomic background or anything. So that's what the Web3 is. It really is building an open internet.
I'd heard a really good explanation where they talked about Web 1.0 as read, Web 2.0 is read write, and Web 3 is basically read write own, where you own your own data. But no, I appreciate that, Eric. Hussein, maybe from Next Decentrum's presentation, I heard the terms NFTs, heard play to earn, heard the metaverse. Maybe just give the viewers a quick kind of breakdown on on those three things, kind of like a dummies guide, maybe.
So the biggest thing is that with contracts and certificates, it's slow. You have to validate with the authority that issued it, and you have to then transact it to transact, let's say, anything that attached to it. NFTs are digital. They're based on a blockchain. The speed and the velocity of movement is much faster, and you can attach any asset to it. And mostly right now, what they're doing is attaching creative assets like art, video, music, because these are the communities that need the most, access to customers and have community. It will be attached to everything. When we go to from NFTs to something like you said, the metaverse, right? Oh, play to earn. We've always had games that give assets to their players, and they can, even some games had their own communities where and economies where you can trade those assets. What NFTs bring is the ability to trade those assets and have value of them outside the community and the platform that a game offers. So suddenly you can play in a game, earn assets within the game, and then sell those assets outside and turn it into real money, or let's say digital money, or then fiat. So that's what play to earn is the ability to play a game and to earn and to translate those earnings into something in real life. And the metaverse there are many definitions of it. It's you living in a digital world where usually it's VR or and now there's an augmented reality world where you can interact with people, avatars and stuff like that. But we've always had that in gaming. You always live, especially online gaming, you always live in some form of digital world. What's now happening is now it's going outside the gaming, let's say, community, and everybody can be there. It's it's where people meet people, because we're a global village. Most of my kids, I think a helpful example is my kids have friends all over the place, and instead of coming to our physical home, somebody, let's say my daughter has a friend in Florida, they meet each other in the digital space. So it's not something new. It's just the word now is becoming more known, and very exciting indeed. Hopefully that kind of brings it closer for everyone.
Thanks, Hussein. It's interesting when you mentioned the metaverse. I look at my own kids. I have a 10-year-old son and a 7-year-old daughter, and I see them playing Roblox and Minecraft and Fortnite, and they're more interested in us giving them, my wife and I giving them money to buy digital skins, as opposed to asking for money to go to the mall to buy something physical. So I feel like how they're the skins that they own in their digital world are what they're using to kind of flex with their friends, as opposed to in the past it was a pair of kicks, Nike kicks, etc. So
that's why Nike bought Artifact, right? Because now people are gonna buy these sneakers in the metaverse.
No, great point. Vinod, you talked a bit about NFTs for brands specifically, and social tokens and creator coins. Maybe just give a quick kind of rundown on those.
Thanks. Yeah, for sure. So companies like Decentrum are doing some amazing things with NFTs for sure, and I think that there's room for companies like platforms like creators to help brands and creators, especially the SMEs and the micro influencers, understand the value here, because the artwork is great, the rarity is great, but I think for a lot of creators and brands, the utility is also very important. And I think that plays a big role in the NFT world for creators and brands who are looking to build fandom, drive revenue, create more of a one-on-one relationship with their community versus having the middleman, which right now is Instagram or Facebook, and where a lot of these communities live for a lot of brands and creators. So I think the introduction of NFTs and decentralization is a huge leap forward for the creator economy, and really put some pressure on the social media platforms who are used to owning everything. So I think from that aspect of decentralization, and not only that, being able to create new streams of revenue through NFTs and through tokens, I think is just, the possibilities are really endless. And we're I think I was talking to Eric a little while ago, and he said it well. We're just in the parking lot for this stuff. We haven't even, we don't know exactly how it's going to be used or where it's going to go, but there's definitely a lot of potential. And for us at Creator, we see that potential living in the utility of what these NFTs can bring, and the long-term fandom that they can build.
No, thanks for that. And I think in each of the three cases, you guys all talked about how things currently work, the pain points in today's system, and kind of what you guys are all building, to take advantage of this opportunity and growth. We've talked about this from a product perspective, and a pain point perspective, but let's look at this from an investor perspective. Why should investors care, about this sector and this space?
I think one of the key things is it is a technology of the future. If you want to be investing in something that will blow up in the future, it's still at its very, very early beginnings. So there is a chance to make bets, I would say, on very successful players. Imagine if somebody would teleport you back to the 1990s in the age of the internet, would you invest? I would say yes, knowing now what you now know. Nobody obviously can tell the future, but you can tell from the movement of big funds. In the time of the ICOs, when the crypto winter started, Andreessen Horowitz launched their crypto fund, their first crypto fund. They're now, I think, on their third of $300 million in 2018, when everybody was running away from the market because they saw something in the future. And Sequoia just launched their crypto dedicated fund, and they're focusing on NFTs as part of that. So these new technologies. So these are the new technologies that are shaping the future right now, and we have no idea what kind of future they're going to give rise to. And I think any smart investor would at least want to have a portion of that, and be part of that, because they can not only fuel the growth, be part of the journey, enjoy it, and also benefit from it hugely. That's why I would say any investor would. I would recommend, any investors right now to have at least look at these markets somehow, and that's why we jumped into it. We're investing our time, energy, and money into it because of we want part of that future.
Vinod, what about you? Why should investors care about the creator economy?
Yeah, I think the creator economy is really just. I think everyone, 5 years ago thought it was amazing and it was growing, and then Web3 came and then added all this new functionality and new abilities for the creator economy. So I think we're really just at the tip of the iceberg here, and as technologies in Web3 begin to roll out and become more user friendly for the everyday creator, we're going to see new form. We're going to see NFTs and tokens and crypto take new forms. Because these creators, are creative individuals. They definitely have the hustler's mentality, and they're going to find ways, just like they did to take advantage of social media and Web 2 and platforms built on Web 2. They're going to find ways to really own more of their audience on Web 3. So I think for investors in the creator economy, Web 3 just brings a whole new slew of opportunity. It's like we're watching the internet unfold all over again. And, when I was in high school, I was really excited to run home from all of my classmates to hop on MSN to talk of all of my classmates. And so I see that, I can see kids wanting to go home and put on their VR goggles and, to do that same type of interaction in the metaverse. And the creator economy with decentralization is going to be a big part of that. In addition to that, I think the decentralization of social commerce is something that we're not too far away from. And as more and more commerce platforms get built on Web3, it's going to be actually easier for creators to integrate and sell online, and it'll be more transparent and more profitable for both the brands and creators. So that's something I'm excited to see kind of unfold, and creator will definitely be positioned to be in the middle of that to enable it.
Yeah, no, it's great. The reference point to the late 90s, having kind of lived through it, I see two kind of big trends. One, from a Victory Square perspective, as we look long term, we do see that this opportunity is, there's a potential for asymmetrical returns for investors. However, just like with the late 90s, when new people were developing and working with these new technologies and throwing things against the wall, there were a lot of bad actors, and we saw, a lot of companies kind of fall by the wayside. But, obviously there are some amazing companies that are utilizing this technology to kind of figure out what the future kind of holds. So I think for investors, they definitely got to be very, very cautious and careful when trading. But that kind of leads me to that, to another thing. I just kind of we've heard about, hacks and crypto scams. I think Charlie Munger recently just said, I think, what was that quote? Crypto is a space run by people who want to get rich quick for doing very little for civilization. What are your thoughts around, all of the media coverage around scams and hacks and Munger statements? Eric, maybe let's start with you.
Yeah, I mean, it's early, right? And when things are early and people are confused, crazy things happen. Every day in this space goes faster and faster, and people are building more and more, and it changes. Like the space we're in today is not the same space it was 3 months ago. I'm giving a different advice to early stage companies that I was giving 3 months ago. We're planning differently, and I think it moves at such a rapid pace. And because it's open and because it's accessible, innovation is just it's unbelievable. As the scams happen, they're really learning curves, right? It's not like we bring in 5 years and bring about exploit. It's happening every 3 or 4 months because the space just moves that fast, and the innovation curve is exponential here. So I think it's just a matter of perspective, because when you're in it and you're working and you see the adoption, and you hear about the scams and hear about these things, it's people pushing boundaries, unsure of what's right, what's wrong, what's going to work, what won't. And some things work really well and some things don't. And each time something doesn't work, it's just a learning experience for the entire community and everybody in the space and everybody looking to come into the space to adopt and move on. I think it's just part of the growing process. There's a great quote. It says, professionals are just amateurs who know how to recover faster. And I think you learn that a lot better in the crypto space. The longer you're in it, the more you see.
No, I like that. I like that quote. Hussein and Vinod, just really quickly, like I think in both of your guys' spaces, I know Vinod with Creator.co and with the NFT specifically around brands or creator coins, and in Hussein's case with authentication with respect to working with museums. Are you guys seeing a lot of how can investors kind of keep an eye out for let's say scams in those two types of areas, or what are your thoughts specifically around those that comment?
Yeah, if I feel love Eric's quote on what separates professionals from amateurs, but I think for us, the kind of taking myself out of the shoes here at Creator.co, I think that the risk is real. I think there are people who don't have the best intentions that are building projects that people need to do their homework on before they dive headfirst in. I think there are a lot of companies that are making huge strides in innovation where there is no rug pull going on. There's a great team, there's great founders, great investors, and those are the companies that you want to pay attention to, especially companies that have a very real business use case. And everyone knows to be wary of the meme coins and things like that, and there are a lot of that going on. But there's also a lot of really cool projects that bring real utility to the real world that will provide a lot of benefit to society in the long run. And I feel that if you're paying attention to the industry and the space, you'll be able to find companies like the three of ours here that are doing some cool, innovative things where there is no rug pull in sight. We've just got too much to lose and a great group of users that we're dedicated to. The risk is real, but I think paying attention to what the business use case is, who the investors are, and what the mission of the business is important to make sure that you don't get burned.
Hussein?
Yeah, absolutely. Yeah. I think I would have some strong words for Charlie Munger. He's definitely someone who's achieved a great deal of success and respected among investors. But one of his investments, which is Wells Fargo, was ran a scam in the forefront of everybody, and nobody was jailed. A blatant scam that was, then the CEO was in front of Congress. So what does he have to say about that? And he said that no advancement to civilization. If you look at his investment, I mean, what advances to civilization did it add really? Most of them are banks. A lot of them did not add value. In fact, they were part of the subprime crisis. So I would argue that it's easy for somebody who's achieved success to look back and kind of point out to what's not working right now. Scams have been around since forever. We heard the term snake oil salesman. People, whenever there's an opportunity to make money, and whenever there are people who want to give money, people will show up and want to take your money. So you need to be careful always. Investors need to do their due diligence, just like Vinod said. Look at the team. Look at the people who dive in first. Assess your risk kind of tolerance. Don't be impacted by FOMO. These are things that you need. Just because it's a new technology, the old tried true methods of evaluating an investment don't go away. And I think that's where things are going. Most of the projects that people are being scammed at or through is when investors did not follow these tried and true, elements. So I think that stays the same. So yes, this market, the problem with this market is the same thing that is the advantage of this market, is that it's open innovation. Anybody can come in, create a company or create a project and launch it. So that is great for many of the people who want to build great stuff, but it's also bad because anybody can come in and create a scam project. So open innovation comes with its challenges. Just like 20 years ago, we had companies that were full of hot air and put advertising in the Super Bowl, and when the market crashed, everything disappeared. Enron, for example, scams happen. It's not particular for this market. They're going to continue to happen, and you need to make sure that you do your research, work with people that understand, ask around, make sure you're actually applying the tried and true methods that Charlie Munger invented as well, added to the market. So use his methods to invest in new markets. That's how I would put it.
No, really good points. And I think the big kind of takeaways I see there from your guys' responses is one, in all different aspects, there are bad actors. Whenever there's a chance to make money, there's always someone there. I think the big thing for investors is to do your due diligence. I also think there needs to be long-term kind of view. I feel like so many people are jumping in based on momentum. So not only doing your due diligence, but this innovation, this may take time. There's going to be a lot of volatility, a lot of uncertainty. Investors should, have, I think, in addition to doing their DD and betting on the right teams, is to have a, kind of a long-term outlook. This idea of, get rich quick or jumping on momentum or FOMO, I think, is what generally in all different cases kind of leads to negative. We're running kind of short on time here. I want to, just kind of end off with a couple of quick questions. One, what are three trends that investors should keep an eye out for?
Yeah, so I would say three trends that investors should look for would be, from a creator standpoint, would be community. So I think the stickiness, the engagement, the size, the rate of growth for communities in Web3 businesses or businesses in the creator economy is definitely an indicator of success. The utility of the product or NFTs that they're bringing to market is going to be something that investors definitely want to take a look at and make sure that there is utility and use case for what's being delivered on Web3. And then number three, I think it would be, looking at the founding team and the advisors. Is it's because the industry is so new, it's hard to point at a group of people or certain individuals who have been at it for 20 years. There's not a lot of them. So looking at what the founding group has accomplished or their education and background in the space, I think those are three kind of telltale signs that investors can use to make their own assessments of companies that they're evaluating in the space.
Hussein, what are three trends investors should keep an eye out for in 2022?
I would say more convergence of the different technologies. So look for projects that don't just tackle one aspect. Look at projects that and look out for trends that, for example, NFTs that have utility attached to it, have, let's say, more of access. Look into the future. Sustainability. What are things that people are building, to combine, for example, the impact itself or bringing people together. See, at the heart, I think Vinod said it, it's at the heart of everything is community. So how are the projects or the suggested ideas bringing community together and capitalizing on community? Because that's forever, as long as you continue to feed it. I think sustainability, we will see more projects that are more, I would say, about bringing together art, music, and I would say more about bridge to the metaverse. And aside from buying land in the metaverse, I would say different ways of doing. It's not just doing something old in a new technology. It's how they're doing something that nobody has thought of. If you think about it, when first internet came around, it's like, oh, it's the internet. Now we can do a phone call over the internet, or we can do video call. But when we see the biggest companies that made, huge advancement is when companies said, well, now we can connect these people with those people, and we can make money by connecting them and create an app and something, sharing economy, the content explosion. So look for things where people capitalize on these technologies. So right now NFTs, we can sell art. Now we can sell art with NFTs. That's very, I would say, mundane. Look for how we can create. I can create new art when I can combine, NFTs, and people vote on something, and the art would be a combination of, unexpected. I create elements, and people with their voting, there's a new piece of art, or art that evolves over time, or something like that. Things that were not even possible before this new technology. I think these are the trends that we're starting to see, where artists are looking at it as a new form of expression, for example. Musicians are looking at it as a new form of expression, I think. And communities are coming together to create that. I think these are the trends. In regards to other trends, I would say we will continue to see more marketplaces coming up that are offering even deeper value. They're starting already to offer, no fees, but it's creating a different market that is not, helpful, because 80% of the no fees NFTs are scams because it's no fees. There's no, so they're trying to find that. And I think we'll see a rise of authentication, scam identification, like these investor services, where helping people invest in NFTs and helping people value that investment and protect that investment. We'll see those services coming up, just like they came up with crypto, where they validate the authentic, source of crypto and make sure it's clean, it's not, laundered money and stuff like that. So we'll see those services, adjacent services that are coming up, powered by things like Covalent, for example. So we'll start seeing these are the trends that I see on my end.
No, it's interesting. Eric had a comment where he said there's no clue what use cases are coming tomorrow. And I think that's the big kind of takeaway right now. There's this new technology, new way of thinking. Everyone's trying things, throwing against the wall. And so, again, it's really important to do your DD, bet on the right teams, because we do believe, I think all four of us that this sector is going to be significant. We hear about play to earn, DAOs, metaverse, NFTs, social tokens, all these different types of things. But Hussein, you mentioned something interesting there, which is, again, picks and shovels. The great thing about a product like Covalent is it's chain agnostic. It's data. It's the Google for blockchain. So there are certain human things that are consistent, universal truths for any sort of innovation or any sort of business. And I think when we look at trends, there's all those buzzwords, but looking at businesses that are, I guess, building the pipes, the picks and shovels are going to be interesting, but really important to, I think, do your DD, bet on the right teams, don't invest what you can't afford to lose, and look long term, because there's still, I think, a lot of rockiness, and volatility ahead. Gents, I really appreciate you guys hopping on and sharing, information about Covalent, Creator.co, next Decentrum. Really quickly, just, how can investors get in touch with you?
Yeah, easiest way, just shoot an email to Vinod, Vinod @Creator.co, and we'd be happy to engage.
100%. For me, Hussein at nextdecentrum.com, or find me on LinkedIn on one of my viral posts. Vinod, you should hire me as an influencer right now.
I was actually writing the proposal this morning. I was taking a look at your link.
And thank you, Anil, and the CSE. My name's Shafin Diamond Tejani. I'm with Victory Square Technologies, VST, on the CSE. Thank you for tuning in. Please feel free to reach out if anyone wants to learn any more.
Thanks, guys.
Thank you, George. The CSE would like to thank Shafin as our guest moderator from Victory Square, as well as our three presenting companies. So thank you to Vinod Varma, co-founder and CEO of Creator.co, Hussein Hallak, founder and CEO of Next Decentrum Technologies, Inc., as well as Eric Ashdown, head of ecosystem at Covalent. Thank you to the people who have also worked behind the scenes on this, our team at the CSE, Barrington Miller, as well as James Black. And of course, the founder and creator of Tech Tuesday, Mr. Mark Francis. Lastly, thank you to all our attendees for taking the slice off your day to learn and support the companies featured on Tech Tuesday. Go to the companies' websites to learn more about them and their projects. If you have a lead for them, please do connect. Next Tuesday, we'll be back with our public company showcase, so stay tuned for that. And you don't want to miss it, so feel free and subscribe at your convenience to CSE TV on YouTube. Hit that like button on YouTube. We're also on LinkedIn, Facebook, and Instagram, so find us there. May you all have continued success in expanding your businesses. I'm Anil Mall with the Canadian Securities Exchange. Thank you.